Happy Friday. Welcome to another week of the Educated Homebuyer Weekly Economic Recap. This is a new series that we started last Friday where we're basically just updating you on everything that's happened this week to help you, navigate the weekend if you're out there buying, selling, looking at inventory, all of that good stuff. We're coming on a little bit late if you're looking for the live stream here, but it will be posted on the podcast as well as it'll stay here on YouTube forever and ever. So with that said, Josh, let's talk about the big news coming out today, which is PCE. That is the Fed's preferred measure of inflation. What happened?
A little bit hotter than expected. We have this idea of base year effect. What number falls off? So what it is, it's a total of the most recent 12 measures. So every month you have 1 month from last year fall off and 1 month come on. So we had a low number falling off from last year. It came in a little bit hotter than hoped for or expected. So core PCE up at 2.7% year over year. It was up from 2.6 last month, and it was month over month. It was like a 1.76 or 0.176, and it got rounded up to 0.2. So market a little bit worse for the day. But if we look back, we closed last week at about 437 on the 10-year. And if we were to close right now, it's 426. So we still improved 12 basis points. For those of you who are not fluent in basis points, it's about 1/8% in interest rates over the week, even though we gave a little bit of that back today if we close where we are. And since the PCE data came out this morning, it's been pretty flat. So overall, a good week. When you and I were here last week, Jeb, what did we say? We think that a slow inching down of rates next week, unless we get something unforeseen. The wasn't really so much unforeseen. We were talking about last week, Fed Governor Waller talking about possibly cutting as early as July. A couple of other voices jumped in this week and said that's possible. And there was a little bit of testimony from Powell to the Senate this week, and he basically said the same thing. If the data comes in calm and we don't see inflation numbers picking up due to the tariffs, then he's open to it. So that 0.176 today, month over month, Jeb, that is almost exactly where it needs to be at 2% year over year. So the fact that we jumped month over month is not important. That's kind of why the market's not reacting too terribly today. It's what does that annualize out over the course of the year? So we haven't seen anything yet that says there's a spike or a jump, even though that's the worry with the tariffs. So we probably need still another month or two of readings here before the Fed gets super comfortable that we're not going to see tariff-based inflation. And that's why the market is looking at September and later in the year for the 1 to 2 cuts that are being projected.
Yeah, and one of the more, I guess, bearish Fed members out there, Kashkari, came out and said that he sees Fed cuts starting as early as September, with the idea that 2 will happen this year. So pretty much in line with previous expectations. Last week was a little bit different just because you had a couple Fed members basically saying, hey, listen, we could see them as early as July. And at the moment, I don't know that July is off the table, right? We've got some economic data coming up next week, which we'll talk about. But the reality is the Fed is meeting, as we discussed, isn't until the last day of June. So there's 30 plus days here for economic data to come out, things to change, which at the end of the day could impact, how the Fed views some of these things and how many rate cuts we actually see.
The other thing we saw this week, Jeb, on the real estate side, your neck of the woods there, pending home sales improved. So we saw I think it was either very early in the week or the previous week, new home sales took a hit month over month. Both of these data series have been really volatile. But what did we see with existing home sales this week?
Well, existing or pending?
The pending home sales.
Yeah. So pending home sales rose a little bit, 1.8% month over month. But the thing to understand here is that the base is so low, so any increase is negligible, to say the least. We're at such low levels with regards to home sales. But the key thing I think to understand here is that even though home sales are low, we're still trending essentially where we were last year. So, when you look back and you go, okay, last year sucked overall, with regard to home sales, 4 billion or so annualized. It's essentially where we are this year. We're kind of saying, in a similar boat, with existing home sales, and pending is one of those leading indicators as to what's to happen. And right now it kind of looks like we're going to have a similar market. The only variable out there is mortgage rates, and it's similar to last year. Mortgage rates did drop last September. And, the Fed came out and changed the Fed funds rate, and things changed, and the market kind of went back up. Could we see something similar this year? Yeah, I don't know that the market's going to front run as much as it did last year, just because of a lot of the unknowns out there with what's happening. But the positive news is, if you're a buyer out there, there's more inventory. Things are definitely moving slower. A lot of difficult conversations as a real estate agent right now. Something I talk about often, and that a lot of the agents in today's market, Josh, haven't sold in a market where things don't sell immediately. And so there's worrisome. There's these conversations that are happening between agents, myself and other agents, and sellers wondering, dude, what's going on? Is my home overpriced? Am I missing something? Like, what can I do?
We've been on the market for 20 days.
Well, even 30, 40 days, some of these houses, and people, with a couple of price reductions, and people are going, what can I do? And part of it's just the market. I'm having conversations with agents on the other end saying, hey, listen, was there any interest from your client? And a lot of it is, yeah, my client liked the property, but they're going on a vacation. They want to visit it when they get back, or they like the property. It's kind of at the upper end of their price point. They want to see some more homes. That conversation was different a couple weeks, couple months ago, couple years ago, where somebody saw something. It was an immediate reaction. They had to do something. You don't have to do that anymore, and therefore things are sitting a little bit longer.
Well, we may potentially be looking at sort of a Goldilocks scenario here. Peter Bookvar, one of the analysts that we follow, when he was looking at that pending home sales data, the quote is, affordability is still the main issue. Lower rates without more inventory just pushes prices up. So over the last couple of years, people were like, yeah, that's great. We all think or know or believe the rates are going to drop, but there's still no inventory. If rates drop, then prices are just going to shoot off up again. And what we're looking at is we have more inventory. So now that there's more inventory, if rates come down, hopefully we can improve affordability, keep the homes moving quickly, but without pushing prices up. Because I don't think anyone other than sellers wants to see prices go higher if rates come lower. We want to see that affordability improve.
No, that would be a good thing. And that would get existing home sales back up. It would improve a lot of the metrics around housing and give people an opportunity to become homeowners, and, and affordability remain somewhat, affordable to some degree. Just side note, Josh, I listed a property yesterday. I want to mention this because a lot of people don't understand how this works. So assumable loans, you hear a lot about them online. I posted something yesterday that I have a property with an assumable loan here in Southern California. And I made a post about it, and I had a bunch of people reach out, and post almost went viral to some degree with regards to the messages I received. It was crazy. People saying, hey, I'm interested. Here's how that works. So that particular property has a 2.75% interest rate. It's assumable, 30-year fixed. The caveat here is that property is selling for $1,035,000. That's what our asking price is. That's a very fair and reasonable price based on the comparables. And so the balance on that loan, Josh, though, is only $550,000. That leaves about $485,000 that needs to be made up somewhere. So if you're a buyer that has a large down payment, $485,000, then you can just assume the loan and you assume that payment. And that payment's like $2,400, taxes, insurance. It's low for $550,000 compared to today's rates.
And it's a shorter loan term also, because it was a 30-year loan whenever it was originated 3 to 4 years
exactly ago. And so now you have to get either a second or come in with that down payment. So just know assumable loans are great. There are some caveats to them. But there are opportunities out there with them now more so than ever. So, find an agent that can help you find them. Yeah.
On that topic of interest rates, where are we at? So Mortgage News Daily as of today says 6.72. So just a hair under 6 3/4. It's just like we said, about 1/8% better week over week, about 1/4% better than a month ago, and almost 3/8% better than where we were a year ago. So are they great? They're not great, but they're definitely better than where we have been. FHA and VA flat day over day, a little bit more than 1/8% improvement week over week, still about 1/4% over the last month and about 1/4% over the last year. So depending on how well qualified you are, best qualified borrowers, low 6s on government loans, under 6.75, 6.75 or below on conventional stuff. So if we can help you with that, if you're gonna be out looking at homes this weekend, if you want to get pre-approved, you want to do that. I think we have the crawl. Do we have the crawl at the bottom there, Jeb?
Yeah, I'll throw one up here. We can use this one today.
Absolutely. So jebsmith.net/start. If you're anywhere looking to get connected with a realtor or get connected with our team in terms of helping you get pre-approved or get a second opinion on what you're looking at and hopefully take advantage of these rates.
Referred 3 different people to 3 different agents across the U.S. Actually in one day this past week. So a lot of people reaching out, a lot of people getting referred, having success there. So if we could be of assistance, let us know. We actually got another buyer from the webinar under contract, Josh. So I don't know what number that is, 4 or 5 from the 2 webinars that we did under contract. So congratulations to them for taking action and actually doing the work. So just to recap, this is something we're doing every Friday to get you ready for the weekend. It's short, it's to the point, but let us know, what you think in the comments. Kind of tell us if you find this stuff valuable. Like and subscribe to the channel if you haven't done so already. But Josh, looking at next week, we got a lot of data coming out. We got a shortened week because of the holiday. Let's talk about it.
Jobs week. Jobs week is always an interesting one. On Monday and Tuesday. So Monday we get ISM manufacturing. It can be a market mover. Tuesday we get the JOLTS job openings and labor turnover survey. It lets us know how much slack there is in the job market. So we've been seeing those job openings decrease. So less jobs available for those looking for them. So that's a big one that we want to look to. On Wednesday, every week we get mortgage applications. It's not something I pay a super great amount of insight to because it varies a lot from month to month and week to week. The ADP unemployment report or the ADP employment report, it's sort of a preview of what we get with the non-farm payrolls. Not always very accurate, sometimes can move the market, but it's been showing us a weakening jobs market. Challenger job cuts, also an insight into big employers throughout the US that are cutting jobs, also out on Wednesday. Normally, we would be waiting until Friday for the non-farm payroll. The June employment report, we're going to get that on Thursday, along with the weekly new and continuing claims. So next week is all about jobs. And if it shows a weakening job market, we know that is one of the key things that the Fed is looking at right now. Their dual mandate, one of those is full employment. If employment is weakening, it leads to a greater thought that we could see cuts coming. And conversely, if we get a blockbuster jobs report and there were 1 million jobs created in June, which we don't believe there is going to be, it would be negative for interest rates. So we're not really here to make predictions, but if I were guessing, shortened holiday week, like you said, Jeb, probably a little bit more of the same. I would expect weak but not terrible jobs numbers next week and just a continued glide lower in interest rates, if not sideways. What are your thoughts?
I don't know, dude. I'm so tired of trying to predict this market. I would say volatility. If nothing else, there's opportunity for volatility. I don't know. Seasonal jobs, summer jobs, that sort of thing. I mean, do they start counting into the employment numbers at this point? Is that something that could potentially alter jobs? Potentially. I mean, I see, just trying to take a broad view and say that there's the potential for that, even in a slowing labor market. You got some seasonal stuff playing into that. So I don't know. If so, it will come up in some of the back end data and we'll be able to talk about it. But I think the most important thing to note at this point from a buyer's perspective, mortgage rates are a little bit lower. You were able to lock in 6 1/8 on a VA loan for some clients, that actually the ones that went through the webinar. So low 6s, FHA, VA for the right buyers. 6.625-ish, 6.5, somewhere in there for somebody that's well qualified, maybe 6.75, somewhere in that ballpark. So rates are improving. There is more inventory, more opportunities out there. You have the opportunity for a potential Fed rate cut coming July, September. But again, remember, it's built into the market. The market is anticipating that. So when it happens, doesn't mean rates are going to drop. We're already kind of seeing the lead, if you will, of the market reacting to it already. So just know hey, we're going to wait until the Fed cuts. The people that did that in September of last year ended up with about 1% higher end mortgage rate. So yeah. Don't hesitate too long. Final call.
No, just
Yeah,
we're around. Jeb and I are available on the weekends. Shoot a message. Use the link below if you want to get started on a mortgage. If you have a question, just want to get to either one of us, you can use info@theeducatedhomebuyer.com, and we can get back to you and get the information you need.
absolutely. And last thing is just know more inventory, more options. No need to rush into it. Find the right property. Be choosy, but be patient, but also be realistic. So, with that said, we'll be back next Wednesday on on my channel for our live Q&A, and then back next probably Thursday, Josh, after ADP. We'll probably do this next Thursday because of the holiday Friday. But till then, buy right, borrow smart, build wealth. Adios.
Amigos.